time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
All right, moving away from Brennan, though, let's actually get into the company. Pinterest, symbol PINS, or PINS, on the New York Stock Exchange, is an online product and idea discovery platform that helps users gather ideas on everything from recipes to cook to destinations to travel to. Founded in 2010, the platform consists largely of female audiences in Brennan at roughly 2/3 of its 450 million monthly active users. The company generates revenue by selling digital ads and is now rolling out more in-platform e-commerce features. Pinterest has a strong 2023 so far, up just over 19% year-to-date, trading at roughly $27.32 and a market cap of $18.7 billion. All right, let's look at the income statement for Q4 2022, which was released in February. Pinterest had a 8% revenue growth for the fourth quarter to $877 million, and 9% revenue growth for the year to $2.8 billion. The company was able just to squeak out a GAAP net income of $17 million for the fourth quarter. However, that was down 90% year over year. As well, Pinterest had a loss of $96 million for the year 2022. On a per share basis, it had 3 cents for the quarter and a loss of 14 cents for the year. Just as a note, Q4 is historically their strongest quarter, as the company benefits from higher retail spending and therefore ad spend for the company during the quarter. But let's look at some of its non-GAAP metrics, which it loves to show. Switching to that, Pinterest adjusted EBITDA fell 44% year over year to $196 million and fell 46% to $442 million for the year. Non-GAAP net income fell 40% for the quarter to a profit of $203 million and fell 55% for the year to a profit of $426 million. On a per share basis, 29 cents for the quarter and 62 cents for the year. So why was non-GAAP just so much more profitable than GAAP? Well, the big difference is just share compensation. The only other adjustment in 2022 was amortization of acquired intangibles, and even then it was a small fraction of the total adjustment. Share-based compensation added $170 million for the fourth quarter and $497 million for the year, which is a lot, obviously. Share-based compensation adjusted is the sole reason why Pinterest was profitable on a non-GAAP basis for 2022. We've talked many times about how compensation adjustments lead to end up misleading investors in many cases, but in Pinterest's case, they go a step further than many companies do, reporting non-GAAP earnings by removing share compensation for their non-GAAP earnings. Pinterest in its Q4 also announced the repurchase of $500 million in shares. They had a share compensation of $497 million. So effectively, they're just repurchasing what they share comped out last year, removing any potential benefit by using share compensation, which lowers cash expenses. You're able to hold more cash in your bank by using shares, issuing that as a salary. So in my opinion, it's just disingenuous, the non-GAAP earnings overall. But Pinterest is by no means the only company who does this, but it should still be looked at, and you should be critical when a company does do this. So moving to the balance sheet. The balance sheet is strong. The company has a strong cash position of $2.7 billion, roughly 14.4% of the market cap, with the only debt being operating leases of $229 million, resulting in a net cash position of $2.5 billion. Pinterest has been able to continuously build this large cash position as it's been consistently operating cash flow positive since 2020. And prior to that, it actually issued $1.6 billion in stock in 2019. So they've had a large cash position ever since that. But looking forward, the company is looking to expand its margins in 2023 by reducing operating expenses on a non-GAAP basis. They specifically said non-GAAP in their earnings call, so I'm questioning about that. Pinterest expects low-digit revenue growth for its first quarter in 2023. The company does not give monthly active user guidance, but has returned to growth year over year in the user base after its post-lockdown fall off. So it was quite high during the lockdown, obviously, as everyone was online, had nothing to do. Most social media websites and general internet companies saw quite a big rise during that period in 2020 and early 2021. But that's fallen off, but they have finally returned to growth year over year for their monthly active users. As well, they're seeing deepening of their user base. So they're comparing their weekly active users compared to their monthly active users. Monthly active users now make up 61%. Weekly active users now make up 61% compared to monthly active users. And just as a quick look at the valuations are weak because their earnings are so weak in quality. They have a trailing adjusted PE of 44 times. And remember, that is including that massive boost from share compensation. So even then, it's quite high. And it's also to be taken with a grain of salt, as there is the big boost by share compensation being removed. So, our take: the company has the appearance of non-GAAP earning and EBITDA earnings, but it's just too far off being GAAP profitable at this time for our criteria. As well, they have low revenue growth previously and expected going forward. Although they do have a nice balance sheet, but that just, you cannot buy a company just purely off balance sheet if they're not producing anything out of it. So Pinterest is releasing their Q1 23 earnings later this week on April 27th. So we will be watching for any changes. But for now, I'll just open it up to you guys.
Yeah, it's a social media platform you don't hear much about in North America these days. I mean, I haven't really heard anybody talk about Pinterest, but when I looked at them in the past, probably over a year ago, it's outside of North America that they've seemed to have gained popularity. And at the time, they were gaining popularity. Their share price actually pulled back significantly before the overall tech sector. So tech stocks really peaked around late 2021. Around November, December, and then they started pulling back since then. Whereas Pinterest stock price it peaked about almost a year before. I mean, January, February of 2021. So earlier in the year, indicating that, it's different reasons. It's not just the overall tech sell-off that impacted the company, but rather likely what was going on with the actual business.
Yeah, if you look at you're mentioning that it was falling off in North America, I think that was about a quarter of their overall user base, and about another quarter was from Europe, then half was from outside of those two regions. Mm-hmm. And there's just a massive drop off in revenue per users in that worldwide audience outside of North America and Europe. It was like 9 or 10 cents a person versus like $7. So it's just a tiny mm-hmm. fraction. So that is a way for them to obviously expand. But when you're looking at those regions, even for other companies, you would never get even close to the same revenue base, but it is quite low even as far as those outside of the Europe and North American
revenue
regions.
Per user dropped outside of North America and Europe.
It didn't drop like quarter over quarter. I think it's roughly the same, even slightly higher, but it's just a mm-hmm. small amount historically and currently. So it's like 10 cents per user versus $7. And that
$7 being North
per
American
user. So yeah, North America. Okay. Europe's about $1, I think. So like Europe's already a big drop off, and outside of Europe, it's even another big drop off.
Yeah, yeah. Mm-hmm. So that's I mean, that's very interesting to know.
Yeah. So that is their opportunity if they can bring that up. You don't expect $7, don't even expect $1, but if they could bring that to 50 cents or something, that is their opportunity. And then if they decrease their cost, but right now it's too far off. That's too speculative for our taste, I would say.
Mm-hmm. Yeah, and Aaron brought up a good point in one of our client chat sessions the other day because we were asked a question on Pinterest. And it's just, who knows the popularity of some of these social media platforms in the future? Look at how quick TikTok came in and is now, the most popular among kids. Like, kids, are they even on Instagram anymore? I mean, I am, but anyways, just looking at Pinterest here, who knows how popular it's going to be, in the future, 5 to 10 years. I mean, my mom will probably still be on it looking for crafts, but I won't be. I'll throw in the towel at that point.
I doubt it.